Bitcoin for the past 10 years has been not only a leading indicator, but I think a risk-on indicator because it does respond to liquidity. So Bitcoin made an all-time high last week. Bitcoin peaked a month before the S&P did. So I do think this is telling us the S&P should be making all-time highs pretty soon. But it doesn't mean I think Bitcoin's capped as well. I mean, I think we have to keep in mind that institutional adoption for Bitcoin's growing. I think that consumer awareness for Bitcoin actually is still pretty nascent. And so when we still have a visible demand coming and a fixed supply, I think it's a lot of upside for Bitcoin.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee reacts as Charlie Bobrinskoy warns the U.S. budget deficit is a serious long-term threat. Let's break it down.
Charlie, coming back to you here now on the value front, how do the U.S. budget deficit and the bond market factor into your medium-term strategy, given what we see going on in Congress?
I would say short-term, it's very hard to predict when these budget deficits are going to show up in a big way. But in the long run, what can't go on forever ends. And these kinds of deficits that we're running right now can't go on forever. Very hard to predict when it's going to end, but we are in unprecedented levels of debt right now. We are unprecedented levels of deficits. This is going to be inflationary. Deficits are by definition inflationary when the Fed starts to fund them by borrowing more or by printing press. It's going to be inflationary, and then tariffs are fundamentally inflationary. So again, very hard to call when, but long term, this is the real threat.
Tom, security stocks have been on a nice run in general, but as we see Okta sort of pulling in the full year revenue guidance here, even though the results themselves look pretty strong, Tom, that in also the context of Salesforce doing this attempted buy of Informatica, is this environment more bullish or is it not with the macro uncertainty?
Well, I mean, companies should understandably be cautious because, the tariff drama is still in play. I think investors are ultimately going to give pass to companies that don't give guidance. I mean, I don't think Okta's sort of pulling guidance means actually there's a downturn coming. It's just, I don't know how anyone could actually say what they expect for the next 2 quarters. But that being said, I do think 2026 is shaping up to be pretty good. So I not only do I think it's a good M&A environment next year, but we'll have deregulation, we'll have some visibility on taxes. I think the tariff drama is behind us, and the Fed, who's been on hold, is probably going to be dovish next year. I mean, to me, all of that means PE should be going up, and I think the $7 trillion of cash on the sidelines starts to get deployed.
Bitcoin whales are showing no signs of slowing down as they continue to buy, even while BTC hovers below its all-time high of $112,000. Despite the sideways movement within a $5,000 range, large-scale investors seem confident, steadily increasing their holdings. This kind of activity is often seen as a bullish signal, suggesting that those with the most at stake believe in a longer-term price climb. Trading expert Keith Allen from Material Indicators points out that whales are accumulating aggressively during this consolidation phase. A chart shared by Allen highlights significant buy volume from the largest transaction classes, signaling strong interest at current price levels. But even with this optimism, he warns that Bitcoin's path forward won't be a straight line. A potential correction could take BTC down to the $94,000 zone, which aligns with the 21-week moving average, a key support level in bull markets. Meanwhile, trader James Nguyen is drawing attention with his bold, leveraged trades on Hyperliquid. His positions, often heavily exposed, have sparked debates and even accusations of market manipulation targeting his trades. As Bitcoin flirts with both optimism and risk, one thing remains clear: the whales are betting big, but the market could still dip before making its next major move.
Okay, Charlie, we've still got rates higher for at least for now, probably for longer than a lot of people would like. And we've got a consumer that's overall getting pinched on the credit side. We'll see how overextended. Now, I know you like value, but value gets affected by those things. No? How should investors navigate that?
Yeah, a couple of thoughts there. One, it is true that higher interest rates actually have less effect on value than on growth because value stocks have a shorter duration. Their cash flows are coming sooner than growth companies whose cash flows are in the far distant. So higher interest rates, all else equal, have less effect on value stocks than on growth stocks, low PE versus high PE. But you're absolutely right. One of the real bear cases on value is the consumer. Today's news was very positive for the consumer confidence, but all of us who are talking to companies are still worried about the consumer. And I will admit that is more of a headwind for value stocks than for growth.
Tom, Bitcoin at around 110,000 right now, at very high levels. And you think that that's bullish for growth and risk overall?
Yeah. I mean, Bitcoin for the past 10 years has been not only a leading indicator, but I think a risk-on indicator because it does respond to liquidity. So Bitcoin made an all-time high last week. Bitcoin peaked a month before the S&P did. So I do think this is telling us the S&P should be making all-time highs pretty soon. But it doesn't mean I think Bitcoin's capped as well. I mean, I think we have to keep in mind that institutional adoption for Bitcoin's growing. I think that consumer awareness for Bitcoin actually is still pretty nascent. And so when we still have a visible demand coming and a fixed supply, I think it's a lot of upside for Bitcoin.
SUI is catching attention with a strong shot at doubling in price, backed by both a solid technical setup and growing institutional interest. Currently trading around $3.70, SUI is moving within an ascending channel and has just reclaimed support above a key indicator called the Gunnar EMA. This technical zone, between $3.34 and $3.59, is seen by traders as a launchpad for rallies, especially after last week's dip caused by a $200 million exploit on the Cetus DX, which runs on the SUI blockchain. Now that prices bounced back above the EMA range, bullish momentum is building again. According to Nebraskan Gunnar, the trader behind the indicator, holding this level could allow SUI to retest its all-time high near $5.36. If market conditions stay favorable, SUI might even shoot towards $7.56, based on Fibonacci levels, a move that would mark a 100% gain from today's price. Adding more fuel to the fire is the recent NASDAQ filing for a SUI ETF with the SEC. While approval is still uncertain, the buzz is real. Europe already lists a SUI ETP via 21 shares, and demand is growing fast. With over $317 million now held in SUI investment products and $2.9 million in inflows just last week, SUI could be gearing up for a breakout moment. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.